What's up everyone, it's Scotty with Money Vesting. So in this video, I wanted to go over some of the reasons, more specifically on the US markets, why we're seeing a little bit of a correction slash a pullback and a dip in the markets. The S&P 500, the NASDAQ, the Dow, they've all been rolling over. A lot of individual stocks like Apple, Microsoft, Google, Amazon, Tesla, Nvidia, AMD. A lot of them are down like 15, 20, 25, 30% from their recent highs. So I want to break down 9 reasons as to why I believe, okay, there is a sell-off happening at the moment. We've been talking about this for a long time. I even did a video on July 22nd, literally 2 days before we peaked out for the market, why the next 5 months are going to be a little bit different for the markets, and we may not see the same winners in the market that we have already seen so far year to date. This again was back in July. So my goal in this video is to kind of reiterate and go over some additional reasons as to why we're seeing this pullback and correction and when this might stop. So hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. There is a 16% annual discount available till the end of this month that you can access. And of course, take advantage of all the buy and sell alerts, options alerts, trade ideas. There's a lot of members only videos and educational benefits included with the link down below. So we'd love to have you on board. So this right here is August, right? So far, Nasdaq's down 7%, right? Very, very strong month here for the bears, celebrating definitely down over 7%, pretty substantial drop. We got the S&P 500 also lower in the month of August, down about 4.7%. The Dow Jones, not so much. It's only down about 3%, which is less than half of what the Nasdaq is down. And that's exactly why we've been talking about having a more defensive allocation, a little bit more repositioning in the market, because the first 6 months were absolutely stellar for tech stocks, for big tech, the Magnificent Seven, but times are changing, right? Those rallies can't go on forever, and that's exactly what we talked about in our previous videos. So going over some of the reasons why we are seeing the sell-off now, right? The pullback and the correction. So number one, stretched valuations, right? So this should not come as a surprise that both stretched valuations and stretched technicals were the primary reasons why we're starting to see a bit of a pullback and this correction, right? Why there's so much profit taking happening more specifically for tech stocks is because a lot of them were trading at valuations that they shouldn't really be trading at, right? I mean, and again, no offense. I mean, Tesla, Apple, I love these companies. I own Tesla, I own Meta, I own Google and Amazon and a lot of these companies. But you guys know where my fair values are, right? My intrinsic values are a lot lower than where they're trading at the moment. And that market sooner or later recognizes that, right? It's not like these moves are not going to last forever. Nothing lasts forever in the market. People who believe that these moves are going to last forever are in for a reality check, right? Because eventually stock cannot go down forever, it can't go up forever. And we will constantly see this market ebb and flow. It moves in cycles. It's a huge pendulum, right? It just swings back and forth from one side, one end of that pendulum being the greed, the euphoria, the overvaluations, the overconfidence, the lack of risk assessment. And the other side of that pendulum is the fear, the uncertainty, the doubt, the panic selling, the undervaluations, right? So it's just that pendulum swinging back and forth. And we obviously got to a level where valuations were stretched, technicals were stretched, and by stretched meaning they were extremely overbought, they were extremely overvalued to a point where we had to see a bit of a pullback. The third reason is seller performance, right? I mean, this would not have happened if valuations and technicals were overbought, but we were still, let's say, up like 5 or 10% on the year, right? Then that psychological barrier would not have been there. But the fact that there's been massive outperformance from a lot of these tech stocks, and even the market, I mean, Nasdaq's like 30%, 35% year-to-date performance. That is incredible. That is a very, very strong performance for the year. So it's very normal for investors to look at profit taking and start thinking about taking some money off the table and be more risk averse. Tactical repositioning, that follows right after seller performance. You do see some tactical repositioning, meaning defensive allocation. This is exactly what we talked about in June and July, that the first 6 months were very strong. The next 5 months, 6 months may not be as strong, and there might be some repositioning taking place. And that's exactly why the Dow Jones is down less than the Nasdaq and it's actually outperformed. There's been a lot of sectors like financials, utilities, and defenses have outperformed tech in the last 1 month. You have to pay attention to these trends to better understand where liquidity is going to. The fourth reason, or actually the fifth reason, is the rising yields. This is more recent, but there's been a divergence, right? The yields have been going higher, the 10-year, the 20-year, the 30, even short-term yields. You look at 3 months, 6 month, 1 year, they're over 5%, right? At some point, there is going to be that flight to quality where you can make 5.5% risk-free. Then why take on the risk and make 7 to 8%, which is not guaranteed, right? With the rising yields, with the bond market, at least that's guaranteed, right? So it's putting additional pressure on equities right now. So yields going up most certainly puts pressure on equities, on P multiples, on present value of all future cash flows. So that's another reason. Inflation on the rise. And this right here is a reason why the markets are a little bit more uncertain after the more recent inflation print, because energy prices ticked higher. We did see headline go from 3.3% over 3.2. Core did decrease, but the rate of that decrease is slowing down. And month over month, we did see significant increases in energy, shelter prices, food prices. So the market's once again asking this question, is inflation on the rise again, right? Is inflation going to be persistent? Are we going to be in a stagflation type situation where inflation continues to stay above 3 to 4%, which is going to obviously make the Fed's job very, very difficult, which brings me to my next point, which is rising rate hike probabilities. I know the market's not pricing in any hikes anymore, but the Federal Reserve's been very clear in telling us that 25 basis points could still happen. Maybe not in September, but could happen in October, November, or December. So the market's going to get around that eventually. Maybe not right now, maybe not today, maybe not tomorrow, maybe not next week, but eventually we're going to have to get around the fact that the Federal Reserve could raise interest rates by another 25 basis points and could indeed keep rates higher for longer if inflation's not lower. Because Jerome Powell's only goal is to bring inflation down. Doesn't matter the means, doesn't matter the ways that he accomplishes that. The objective is to bring inflation down, because he mentioned that the pain of not bringing inflation down is going to be far greater than the pain we go through today in the short term in doing our job and bringing inflation down. What he means by that is if inflation stays higher for longer, that's going to be far more painful for the economy, for the markets, than what we're going through right now. So keeping that in mind, his objective is very clear. Doesn't matter the means. So if inflation continues to be persistent, there is going to be higher and higher probabilities of higher rates, higher for longer rates, and maybe not cuts. Okay, and that I think the market will get around that eventually. And then finally, we got some August seasonality, right? So August, September are some of the worst months on the year for the market. So there's a seasonality effect to that as well. But August is not this brutal. September is usually this brutal, but we're seeing August be turning out to be a very, very brutal month. I mean, with the Nasdaq down 7, S&P is down over 4.5, close to 5%. That's a pretty sizable pullback. And then finally, China's Evergrande bankruptcy, which was filed on Thursday in a New York court, Chapter 15. I did a video on this earlier today, so make sure that you do check that out. But in my opinion, these are some of the reasons, 9 reasons why the markets are going through a little bit of a pullback and the correction, which could last maybe a couple more weeks here going into September. We could be in this situation where, okay, markets there's some profit taking, some repositioning. We see the markets come down to some support levels and then eventually start consolidating sideways and then start rotating back higher. So this is the Nasdaq. Very, very important support level is exactly where we are sitting at the moment. That's going to be at roughly around 13,300. If you do see a breakdown below this level, well, guess what? Next support is going to be 12,250s. So this right here is going to be that next level to watch for the Nasdaq and of course for the S&P 500. Right now, once again, we're coming down to that support at 4340, 4350. If you do break down, next support is going to be down to inside this green rectangle, sitting roughly at around 4150 to 4200 for the S&P. So hope you guys enjoyed this video, and let me know in the comment section down below if there's any other sort of new reasons or narratives that are kind of playing out or catalysts that are driving the markets lower. Anything that I didn't put on the list, let me know in the comment section down below. As always, if you enjoyed it, found it helpful, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below. As always, happy investing, and I'll see you all in the next video.